Right. Hello, hello, hello. Oh, starting me out today. I mean, if you guys can hear me okay, you should be able to. It's showing me that you can anyway. Uh, Start that. There we go. All right. How is everyone on this rosy Thursday morning? Sound might be good. I think I can hear you. I don't know, is it a good thing? Do I sound like I have a voice for radio? Maybe. Maybe not. I'm good with that. Yeah, that's why I was running. That's why I ticked down to zero because I had to grab the coffee. Yeah, definitely tired. Definitely tired. Yeah. So second lacrosse game of the week. And yesterday was like it was just like a crazy day. Like I had the boys end of the year party, even though we're not like officially done yet. We have tournaments this weekend and one more round of tournaments after that. Um, we had there's just tons going on. Hold on, I'm trying to get everything set. I hate when it does this. Like it like resets everything and it's like, oh no, I gotta log back in over here and I gotta log back in over here. And it's just like, oh, one sec. Stop. Why are you doing that? Makes no sense. All right. So, but yes, fun market, right? Um, Major movement, right? Couple easy plays if you were there and paying attention. Like the Swiss, Todd's like, "How about that Swiss? Nobody expected it." I'm like, "No." I'm like, the change. Yeah, I don't think anybody expected the change, but I did expect movement in the Swiss. Just because everybody else is doing it, it would be very odd, right? It'd be very odd that like they didn't, right? Um, just it's kind of one of those things. It's like this could be a little hidden opportunity, and it turned out that it was. I mean, it was a major move. You know, props to the Swiss though. A point five. I think that's it's a bold move. The Swiss has been making some major moves lately. But again, a lot of that move started yesterday with the U.S. interest rate rise and talking about what's coming, and none of it is great. I'm sure the White House was consulted on all of those statements before they came out, right? It's like, wait a second, let me get this right. You just said we're gonna the unemployment rate is gonna increase, right? It's gonna increase. We're not gonna get inflation under control until 2024. I'm like, these are all things that the sitting president is like, you're gonna do what to me in the next 2 years? What's gonna happen in the next 2 years? It's like, yeah, you rode the first high, and you're like, look at all the great stuff that we did. No, the last guy did the great stuff, and you got the benefit of it, but then you didn't do enough. And yes. So, and again, we know how that works out. If you go into a recession and all those things are going bad, there's typically, it's a very high percentage that there's going to be a switchover. So, I don't know. Let's see what kind of candidates we get. But it's not looking good for the one side. Um, not with the projections from the FOMC. But I mean, look at this: 300 pips in the dollar Swiss. That is a monstrous move. I don't think I've ever seen one that much, in one. Um, but it just that's I mean, wow. Again, it's crazy on the back of the United States raised 0.75 and then Switzerland raised 0.25. Or I'm sorry, point 0.5, right? And they're still negative. So it's not even like you're getting paid over there. So yeah, craziness, craziness. And again, this is the U.S. trader reacting to stuff. Um, Pound, they did what they were supposed to do. I mean, the pound was, they as much as we are tied that we are being forced to raise our interest rates, the only reason we can do the rates that we have is because people have up until now been spending, um, and because it's such a big deal. The pound, on the other hand, is yeah, they have to raise, but they're being forced not to raise it as much as they probably should, because yeah, what they have is not looking good at all, right? And again, they're just a little bit farther ahead. Their inflation is a little bit higher. Um, yeah, so not a great scenario. So they raised again. This is the fifth time. Still not to where the United States is now. They have been passed. So again, the carry trade would be more in the dollar yen. But uh, did see an article yesterday where China and Japan are now dumping U.S. Treasuries and not purchasing at the same rate that they were. So they are lowering their U.S. Treasury holds, which I thought was, it's kind of an interesting, an interesting note. It's not much for like an individual day basis, but remember, a lot of our debt is actually held by China and Japan. They hold a lot of it, and they are starting to dump it and get rid of it. So, you know, interesting move, longer term play, not a thing we can do today. But again, the Philly Fed coming in. Considered a medium mover. Philly has been much, much stronger than Empire. So not surprised that it is negative. I'm glad it's not 11 because that would have made today even more exciting. But I don't know. I'm not necessarily shocked by it. It's not one of those things that I think is big, but it will have some implications in the market. Unemployment, right? Wasn't long ago that we were talking about, wow, look at this 185. We're doing an awesome job, right? Now we know it's starting to creep up, and the Fed just told us, hey, the labor market is going to have to do our job for us. So, yeah, we're going to have to, this is going to continue to go higher. I don't know how it's going to go. I don't know that we're going to go into, I don't know with this shallow. I love the shallow recession. It's kind of like, how do we tell them it's going to be a recession, but not really a recession, right? Like, how do we make it seem like it's not going to be really bad, right? If you guys, I don't know, I think most of you attend the Natick one in the morning because it's just below this, but um, you know, the current speculation is end of the year GDP is going to drop down to 1.7 instead of 1.2. Or I'm sorry, it's dropping to 1.7 down from a 2.8 forecast in March. So that's pretty bad that we've lost that much since the March forecast. Headline inflation is now 5.2%, up from 4.3%. So again, getting a bit more there too. And then interest rates are going to be 3.4%, up from 1.9 is what they thought. Because originally they were like, yeah, we're going to do slow, steady, 1.9%. Now it's expected to be 3.4% at the end of the year. I'd love to see what interest rates are going to be like, or what mortgage rates are going to be like if it gets up to 3.4. Um, could we have a mini? I mean, we're already seeing 22-year lows with mortgages now. You raise them up to 3.4, the overall up to 3.4. What the heck are mortgage rates going to be at? Todd's like, this is historically low. This is a joke. I'm like, it is, but it's not. I mean, in my time, I'm not used to seeing 5 and 6 and 7%. So for me, that's a lifetime high for me, right? For you, Todd, it does not because you were back in the 14 and 15 range. So yeah, that's where we're at. I'm curious to see today too if Japan's going to drop some type of a bomb. It's kind of pulling back again, but again, monetary policy statements from Japan are always interesting. Like I said, they'll intervene. Well, I don't like the drop of a hat. Like they don't really care. So I'm curious to see what if anything comes of that. Um, there you go. Hold on, I missed this one. My basic following is this: excess and inflation is kept rising at an uncomfortable rate and is warranted, but they've maintained. Yes, for Belker, yeah. So projecting higher employment. That person's not wrong. But besides that, I mean, everything is, again, everything's in, everything's telegraphed. I can't afford that. Cafe owner breaks down over minimum wage hike, which again is true. Everybody wants minimum wage more, but when it costs them 10 times more to be able to buy things because inflation is high right now, they can't afford a minimum wage. So all those people that say you should pay me more, they're going to pay you nothing when the business closes. And again, this is going to be a real world thing here too, right? I love it. It's an increase of $40 a week, but if $40 a week is crushing him, he's already on the line. And at the same time, I mean, here you go. He's probably renting something, right? Right. If this guy is renting a storefront business, when he goes out of business, not only does his employees not have to worry about getting paid a little bit less money, he's not getting paid, and there's no one paying rent. So, yeah, raising minimum wage, I get it, right? But understand that a business owner also has to buy things, and he's probably not rolling in it either. Maybe he's a jerk. Maybe he's a slumlord. I don't know. But this is why inflation is such an important thing to tackle before it actually happens. So, yeah. And I don't think the worst is in yet. Tomorrow morning, we really don't have much. BOJ press conference, and then again, Powell doing his little speech on, the inaugural conference, right, for the international role of the U.S. dollar. Um, this kind of goes back to the same thing. If if you have to tell somebody that this is not why you're doing it, that's exactly why you're doing it. Okay. Um, I don't think I posted in chat yesterday. I sent it to Todd. Yesterday there was a poll concluded that the Republicans and Democrats actually agree on something, right? It was 54% of Democrats and 52% of Republicans polled agreed that U.S. democracy is on its way out, right? Um, Only 1 in 4 people said that they were actually, that they actually watched the first day of the January 6th trial, and I think it was total only like 27% or like 35 or something like that. It was low. It was below 40. Actually said that they even looked at the highlights later on. That it's just not. It's a non. It didn't matter what side of the aisle you were on. People didn't care. Nobody cares, right? So it was interesting that they're saying that democracy is dying, and then at the same time they just don't even care about the January 6th trial at this point. And this just goes to show you that things like inflation, prices, will, for lack of a better word, will trump all. So it's interesting that he's talking about this because, if you're talking about the international role of the U.S. dollar and how important it is, that means you're scared that it's going to lose its status, and rightfully so. We are going to lose its status. So, yeah, unfortunately, the actions of what we're doing now is every reason in the world for us to lose it. And now that China is actually dumping it, dumping our debt and treasuries, yeah, all countries are right now. So yeah, fine, fine, fine. All right, let's go over to the markets. Let's see. VIX is maintaining that 7%. Gotta love it, but dollar not necessarily moving. So yesterday for the dollar, we talked about, it was looking more like a short, and it did. I mean, right here at right where it was, yeah, there was the spike higher to literally trap these people up top. And again, we talked about playing it in kind of a short. Look at this, right? Initial kind of spike up, just really fast, bink, and then poof, collapse. We talked about it being lower, and right now it's lower too. We talked about how it was setting up. Now it ended up going into that top zone. So again, obviously we'd had to move the yellow bar, but from where we were 24 hours ago, right? We were sitting here 24 hours ago saying, "Hey, listen, we're in here. This is looking like it's going to be more, of a dollar weakness based trade." It's hard to debate that by the close of the market yesterday. We were all the way down here, and now we're sitting all the way down here. So, again, I told you I felt 105 is really, really high. I mean, we're 104.50 now. It's not like we were like, whoa, 99, right? But the way that it was setting up, the way the market had factored it in, that's kind of how it was feeling. So, yeah, fun and excitement all in one. Now, if you want fun and excitement, I did mention it with Todd too. I'm pretty sure everybody knows this already. Krispy Kreme. You guys all know what Krispy Kreme is, right? I hope so. If not, you got to change states. Um, Krispy Kreme said that they will offer a dozen donuts for the price of 1 gallon of gas. So right now, you can currently get a dozen donuts, right? Dozen donuts from Krispy Kreme for $5.09. It's an awesome deal. I mean, who doesn't need more Krispy Kreme in their life, right? I mean, I think that's awesome, right? They're looking out for the people, right? You can eat a dozen donuts for what it cost you, and then when you grow a spare tire, roll yourself down the street for free, right? So yeah, fun. Um, Crude oil is dropping. Crude oil is not liking this. Like, you're going to take us into a recession. People are not going to have jobs. Lovely, right? So we'll start with the Aussie. So Aussie, we were talking about, yeah, sure, gas for diabetes. Exactly, Ernest, that's what it is. That's what Todd said. Like, everybody needs one of those, like, hot, fresh, like, I don't even want to know what's in it. Like, I really don't. It's not good for you. I mean, it's straight sugar. But when that red light is on, it's goodness in your mouth. But yes, it is not diabetic friendly. Hey, but you need more diabetes medicine that stimulates the pharma industry. Maybe that's how we grow the economy back, right? Stimulating farmers. So anyway, yesterday we were sitting down in this. Actually, where were we at? We're sitting right here, and we talked about, hey, listen, we're putting a zone in. It ended up coming through the zone just a little bit, but we talked about playing this with some type of a binary product. Again, what did it do? It kind of rallied up beforehand. The news came out and dropped it down, right into a zone. And then boom, we took off all the way back up to 70. We talked about, again, being a big push, and it did. The big push came in. It found a top, and again, the top kind of deteriorated last night, and then the Aussie data came in, and we kind of pushed back down. So it wasn't necessarily a ping pong effect, but again, it did have the movement that we wanted to see. And again, there was a long and a short here. I don't know if here, I'll let this back on. Go backwards. Where was it? There it is, right there. Look at this. Long and short between two zones. Opened all the way down, all the way up, and then closed here. Actually, it probably went up first, all the way down, and then came up and then started to build back again. So again, we talked about having kind of a limited risk product in there. I mean, this candle itself is 60 pips. So obviously some opportunity. I don't know what to say about it now. There's a ton of opportunity in it. All right, so right now, we got pretty close to the 50. I kind of like this 61.8 level better. Probably adjust it down to there. How much is that? Let's see. 14 pips is probably better. I like this level again. Is it fresh? No. I mean, it's already been pushed pretty far down. You could take this and say, well, wait a second. This is the untested one, right? I like this one better. And yeah, it's kind of more in line with the old one there. The only reason I'm saying that this one is probably pretty decent, it's why I kind of really shrunk it to make it smaller, right? To lower the risk on it. Actually, we just lowered it a little bit more. It's about 12. The reason why I'm doing that is because, again, the 61.8 is going to be a very big psychological level that people are really, really into, right? They love that 61.8 level. There are buyers there. It did have a big push out of that level, so there is going to be some. Again, we know what the news release was, but again, it didn't send price down, so there was buyers here. Again, it's the candle bottom is higher than this one. There's something standing there. So right now we're in kind of more of a short base pattern. I can remove 70 because 70 is not really as important right now. You can see it kind of Harry Potter going through there. Let's see. Are we at a level where people are jumping in? Close. It is right around that 50, so I'd say that we're going to mark that. It's kind of the level. We'll just copy this and put it over there. I would say that these are probably the two levels that we're looking at. This would be a target first, and then could we take a bounce off of this? Sure. The 61.8 comes right in at 69.23, and again, would not be surprised at all. Again, is it a demand zone? Yeah, it is, but it has been kind of pushed to the end. It is a little bit past, but again, it is a large psychological level there, so it does coincide. But if you're looking for more of a fresh level, it is a little bit lower, right? Um, that was out. Excuse me. That one is out from yesterday. Kind of clear some of these off. All right, so that was what we're looking for. ASEAN, we got really close to the 50. We talked about this one. Really, we had a zone there. We'd already hit it once. It was, vert within a second one. But there's where the news was. And again, I think it's pretty clear that this was going to be, more of a short. Right, this is the Aussie news, right? The Aussie news from last night. And again, this is kind of the disappointing unemployment, and just kind of pushed across. As you can see yesterday, right here is where the FOMC news came out. It moved it up a little bit. I wouldn't say that this was really anything earth-shattering. Again, there was a level and it got hit, and then hit again and based again and hit. It didn't actually. It wouldn't have filled for a Harry Potter anyway. But we had talked about it pushing up. There was really nothing slowing it down over here, so we kind of expected this. And then we're looking to get the entry here, right? But it missed. It missed it by a very, very tiny amount. 5.4. So, and it's a shame because it was a nice pushback, to the downside. So, and again, we're bouncing off that level right now. Let's see, what else can we do here? Let's remove some of these just to kind of keep it a little bit cleaner. It is an interesting spot that we're at now. Actually, this should be here. It should be there. So we're bouncing off of. So right where we're at right now, the 92.10, it is a zone. It's based here and it had a kind of a little bit of a retouch. In the grand scheme of things, the last really major kind of, and again, this could have been done on a higher time frame too. Your low to high, we're at the 50% right now, right? It kind of came up and just missed the 50 from the current high to low right now in this new trend. So we kind of haven't breached it either way. I think at this point it kind of puts us gives us a little bit of a bracket system in here. We're up top. If we get into the 94.56 range, we look to go short. It's already been a level once, and again, it got front run. It was nice off of news. We don't need the news anymore. And likewise, again, we've tested this level down here. We've challenged it a few times, but again, it keeps getting turned off the demand zone coming in a little bit early, and the 50% is right there. So we should, technically, again, should be, and I say should, we should get some more help here. But a lot of it's gonna be on the yen, and see how far that the yen. Yeah, we're down to 3% now, 3.5. Yeah, Russell should take it the worst of everybody, and it currently is. So yeah, I think there'll be a bit of a retracement. This is a decent level if you guys are looking for something. It's a shame this is not earlier in the week because I would have liked this for a longer term trade. So here's the pound. Yeah, I mean, it kind of pulled down. The news came up. It drove us right back into that same level. Again, kind of that Harry Potter trade. We talked about it yesterday. It kind of pulled up, and then this was really the start of the European session, and it was pulling up into that old Harry Potter. It shorted. It was fine. It was good. Had you marked it off with more near-term based data, that's where you would have gone. And when the news came out, it literally spiked right up into there, grabbed it, turn and roll. And I believe this is already out. I think it hit. I got an alert for it, so I think it is out. Yeah, it's out. Yeah, there's your 1 to 3. Um, I got a bunch of alerts all at one time. So great little push on this one. We were calling for it. We were hoping that it was going to all the way up and drop. It didn't. It came to here and then drop afterwards. So the drop was right. It just unfortunately kind of the market took it early, held it, and then did the same thing. Pulled the drop and went literally up and then right back down again. So yeah, arrows in the wrong position, the right movement. So right now, I would say, it is stabilizing a bit. I think we come back down and we start to challenge this 85 number again. And again, 85 is kind of like the equilibrium point for this one. I think it's a decent level. Typically, 83 to 88 is where this one likes to roam from. I mean, technically, this is some pound strength coming in. There's been some statements this morning about the euro being a little bit on the weaker side. I agree with it. I think it's fine. I'd really like to see it take this bounce off of the 85 and kind of have that be kind of a more or less a reset point for the new week. Right now, the trade has already happened, and we knew it was going to be a nice mover, and it did. But it's over at this point, so there's not really nothing we can really talk about at this point. All right. So look for 85. I'll literally set this down here at 85. And that's where we're looking for the bounce. We can pull this one off. We're at the 78.6, so I don't really care about this anymore. I know James loves his. He's like, yeah, the 78. I'm like, I don't like the 78. I hate the 78. I think it serves absolutely zero purpose. Right there. You can see that spike actually pulled. Actually, it kind of did what it was supposed to do. There would have been your base right there. Right there's your green candle. There's your 61.8. There's your push off, and boom, right there. So a couple different ways to play it on that one. Right. Yeah, I got a couple alerts on this one. Euro yen. So euro yen, we called for this yesterday, and again, perfect opportunity to take this one short. There's your. I mean, at this point, we knew it was choppy. We knew we had one push to the brink. We're just looking for a break. No break. Again, there's 2. There's 3. There's 4. We're like, this one goes through. We take it. It came to the brink, pulled back up again. You charge your guns, and boom, we are out at this point. I was trying to update this one on Discord, but I can see the Discord window, but I can't get the Discord window to pop up. So I have to record this one, but hopefully you guys were able to grab it. This was a pretty nice move too. This was we had our profit target to the 61.8 that we've been talking about for 4 days now. 87 pips to the downside, right? It ended up running all the way down, and again, we talked about 137. Look at that. There's your roll right off. There was where we talked about price being able to go to. I mean, easy grab. And if you don't believe me, go watch the recorded sessions from every day this week. We've been talking about the drop here and where the potential target was, and it literally rolled right off of that one. So, all you haters, take that. Look at that. Boom, and right back off on the retracement. So, again, trade is done. The alert was in the Discord channel. If you guys are following that channel, like I said, I can't update it right now. I'm gonna have to restart the PC and see if it for some reason it refreshes itself and I am able to again. Um, but again, easy grab. Hope that you guys were able to get this one. I'll post the picture later today as far as the alerts go. Euro dollar. So euro dollar. We kind of have detailed this one. Again, the 105 yesterday morning, Europeans sent it down. We talked about getting long. I did not touch this one in 24 hours, but there's your, price drove all the way down into 103.64 and went straight back up again. And this one rallied off the initial purse, 110 pips. So got nothing to say on this one either. I did mention in the next session today, I would expect that there's probably a reversal doing this one that we do pull right back down again. It's sitting here, right? But go look at those sessions from earlier in the week, and you'll see again Price was driven in right in for news time, and again, we got the nice little pop out. And everyone's like, "Wait a second, you raised interest rates. That's strong dollar." It is, but again, everybody knows it's strong dollar. So when it drives it into a higher time frame, the 4 hour zone where there's buyers in there, you take the buyers. You don't go with the interest rate. You go with the buyers. Um, and again, this is purely dollar weakness, straight up. And then once everybody that went short was like, "What the heck?" and they stopped out of the position, then it went right back down again, right? So, yeah, yeah, nice little move. But right now, I like it more on the negative. I do think it comes back down again. I think we test 103, 61, 64, whatever it is. Um, I think that's a trade setup, and I'm kind of looking for this one. Um, I don't know if I'm going to say next week, right? Because I feel like it's not. I don't know. I'd like to see it roll back down again as dollar strength continues to push in. But overall, I think the fact that there was so much kind of mention of what so much mention of what this recession could look like. Um, hold on. I I just feel like although we're jacking the interest rates, um, I feel like the recession is really going to weigh on the dollar. Um, will that affect us to the point where we don't hit parity? I don't know. Like I want this to roll down. I want the dollar strength to continue to roll into this market, right? I I think it's going to take a little bit to break through this. Okay, I think the scenario that I think we need. I think this is going to be a little difficult to break through. Then we got to break through another one at 102.37, which is also a 4 hour time frame, right? I think if they say the next interest rate is likely to be 0.75 as well, I don't know if they'll go that far. I feel like if they do, I feel like, wow, I don't know. I feel like I really didn't think that, Powell would have the guts to do 0.75. It's what was needed. I don't think he'll do 0.75 for next time, but I feel like if people start talking about it and the consensus is that, yes, we are out of control, man. Out of control. We need it. Give us the 0.75. I think that's the catalyst we need to get down to parity. Do I think the end of this story is over yet? No, because again, July, ECB raises a little bit. I think that helps them just a tad. I mean, if they're doing a 0.25 raise and we do another 50 again, it's every reason why it needs to get the parity. So my goal for a 2022 parity with the euro is still there, but we got to chunk through some stuff. So right now, again, looking at this more for a rollback to the downside for today. We're kind of at a level right now if you're looking for something. Um, I don't think it's a horrible, you know, I don't think it's a horrible position. Pound yen. So pound yen, we were looking for up or down. Again, we were looking to drive into one of the two levels before the news. It kind of stalled, unfortunately, right? It stalled before the news today. And again, it had pushed down. You can see the European session drove it actually. It actually broke through the low before, right? We're looking for 160, and then it came up. And then if I delete this line right here, you can see exactly where the price went to, right? So we were talking about driving into one of those two zones. The low was 160 exactly. 160 exactly. So yeah, hope you guys grabbed this one. It was a 300 pip move off that bounce. So hope you got it. The only thing that's crappy about this one, and again, we've talked about how important 160 was going to be. We talked about driving it to there either way, to get there before the news, and it did. It took the news to come down and grab it. The only problem with this 160 is the bid-ask spread may not have gotten some of you guys into the trade, right? So the bid-ask spread, because it didn't widen at that time, it may have cost you a little bit. But again, we were talking about driving to the low side. We were going to go long. 160 was the trigger. It came down to 160, so you may not have gotten a fill on it. Maybe you got something cheap on Nadex. Was possible. But again, 300 pip rally, right? 300 pip rally in 2 hours from that zone. So again, trade's done. Not much I can say about it now. We talked about how important it was, and again, the zone. I mean, it looks like 3 o'clock. They ended up burning through the zone, but yeah, we talked about those two levels. So there we go. Actually, let's adjust fibs on it, see if it gives us any new target. Yeah, look at that. Look at that. Do you guys see the 50% right here? when I bring it down to the new bottom, the 160 mark, which we had drawn up before, actually, now we actually have a level right there, right? So we can delete this. We can delete this. We'll extend this across and talk about, hey, listen, this 164.15, not a bad level. We can get up there, right? It's a confirmed level, and it happens to be the 50%. So we'll see. So that kind of gives us, an ability to take it on two sides. So, all right, pound dollar. So pound dollar, I had the right drawings. I talked about up, and it's funny. I actually drew it almost close. So we drew this yesterday here, and I said if we just base sideways and do nothing, look for it to go up. And here, I'll delete both these so you can get the idea on this one. But there's the movement right there. And I said if we base, look at that. I drew it almost exactly to the spot. I got really, really close, guys. You got to give me that. I got really, really close, and it did. It ended up popping it right back up again. We grabbed that level and pulled, kind of retraced back down again. And we talked about it coming all the way. Actually, we talked about these are the two scenarios. We like this one. There's your pop. So it didn't come this low. But then we talked about, potentially it pulling back. And it did. It kind of went lower and it kind of pulled back a little bit, right? It wasn't a very big move. It was one candle, right? It was here. It only went, it was 63 pips. So off the news, it did do a 63, didn't retrace fully. Unfortunately, again, dollar weakness, that recession thing seems like it's taken over. So again, hopefully you were able to grab this one on either of those two, but we talked about that. Right now, we had this line before we mentioned. It is kind of coming up and popping and rolling off of it. I kind of like this one for a couple different reasons. Let's pull all these off at this point. We do have a basing level here, and we do have a test. So we're kind of looking at this. It is rolling a little bit early. I do think this one comes back down again. It's been a very, very strong push upward this morning, which again, it's justified. But now we're seeing the dollar U.S. trader kind of coming back into the market. I have more of a profit target on this one than an entry. Unfortunately, the entry really didn't get hit. It looked like it grabbed this wick here. I would say right now, this is where I would have, if you are short, I think this is where you're looking to take your profit. Right around the 102.32. I know there's a level here, and if I had to do two profit targets, I would say that TP1 is going to be sitting right there, and then TP2 on this one is going to be just below this one at that level down here at a 120.32. This is a pretty decent range, right? You're looking at about 100 pips, right? 99. There you go, 100 pips there, and then it's about 190 pips down. So it is a large amount. I would not hold this one over the weekend, but I think really going into the next 2 days, I do think this one rolls back forward. Maybe we maintain and stabilize, and if we can get an entry up top, if we can get an entry, I mean, heck, if we can open or get anywhere close to this one, I think this could be a trade for next week. I would actually not be, and again, you guys know my opinion on that. Let's see, 16, 17, 19 right there. 19 is right there. For the start of the week, if we can maintain high, if we don't retrace back now in the next 48 hours and we maintain this kind of 123-ish, 122-ish, 123 is only right there. I think this could be a weekly short. Look for one of those weekly contracts that take this one back to the downside. Again, U.S. recession horrible. People absorb it for 2 days. The pound dollar is in recession, and they're sitting there with 9.6 or 9.2. 9.2. We're 8.6. They're 9.2. They're in a much crappier position than we are. So I think this has the ability to roll back down. So be looking short. Dollar CAD. Dollar CAD. This was a hard one. It was basing in this level, but it wasn't fresh, so we were really not using this on the top side. Again, we had 1, 2, we had 3. This is 4 base. Like, yep, it's going to break. But it was pushing high. As soon as the data came out, bam, slammed us all the way down, and we tagged the 126. Literally to the dime, we grabbed it, we came back and based, and again, parabolic move, retested it, and then came back up, and we've really retraced the whole thing all the way over again. So, again, dollar CAD is now over, right? Not much else we can say about this one at this point. It's tagged those levels, and again, we can slide this up just a little bit. I don't think it matters that much. But that's where we were sitting yesterday. Came back, grabbed the 23.6 at 128.64, right? And that was the bottom in reverse. So complete parabolic retracement move. Some people are actually had an email the other day. A person's like, "What is a parabolic retracement?" Parabolic retracement, for those if you're listening, it's a strategy that I have for news. When you get enormous monstrous moves, you find the bottoms and then you retrace them back to the origin of the move. You obviously need other knowledge besides just what a parabolic retracement looks like to trade it. So please don't be like, oh, it moved big, let's reverse it. No, there's ways. It's about finding where you're reversing it is really kind of the important thing. But again, here's a full retracement yesterday off of FOMC, and now the full retracement back again in what, 12 hours. So it's done, over. Um, I do think at this point now, again, the 129 level is there. I kind of like to see this continue to rally up. I'd like to get up to this 130 mark. I think if we get to 130 and we start the week at 130, I do think there could be a potential rollover back down again. Oil is basically taking on the chops today, as it should. Oil is currently down right now, 2%. We're down to 112, which yesterday we were talking about 117, 118, right? So it is down. That is why we're seeing a lot of CAD weakness coming in. It's not like Canada has like lost a chunk of their territory or anything like that, or they're sinking. But again, we're seeing dollar strength coming back in the U.S. market. I think 130 is a potential rollover. Parabolic retracement is done. Again, total move on that kind of peak here is what 125. If you remove the spike up, it's about 100 pips. So big mover. A lot of binaries broken over there. Again, good one, but it's over, and now we've retraced it fully back again. So that is also done. Dollar Swiss monsters moved down, and again, 50% retracement level. There was sellers in there as well. I talked about this. You can see it. Oops, not on a 5. On a 15 is fine. You guys can see it right here. Pull down, pull back up again. Little kind of nice little level there, stuck between the 50 and 61. Again, started yesterday, came back up again, was really basing sideways, came back up to the 50 in time for news. At a, I can just draw it this way, right there, which just also happens to be, again, bracketed by the 50 and 61.8. There, confirmation, love it, and all the way to the downside. So I am surprised we're not seeing more of a reversal in this one. Again, I don't know what the talking heads are talking about, but obviously it's not great today. But I do think we find a base. You can see we're starting to run out of steam. I mean, it's the US-based session, and we're barely putting any movement in right now. Let's see, since the open, we've moved 8 pips. So in 40 minutes, we've moved 8 pips. You can see this was not really flying. Really since the 8:30 news. Let's see. Yeah, we're playing like a 30 pip range right now. I think there's a reversal candidate in this one. It's just really finding the true bottom. The way to play this one on the reversal is wait till we get a green, red, green color change on the bottom. And again, it'll kind of look like a failure to go lower type pattern. You'll see kind of somewhat of a basing, a little bit of a pullback. And then when it pushes down, it won't go deep. It won't breach the new bottom. And then as soon as it closes green, it's what we would call a color change. It's when we have a reversal. It is kind of playing into a parabolic retracement, right? But you can see we have a green, but as soon as the red broke, it invalidated. In this case, it didn't go below. In this case here, you're still not above. It's not really exciting. No bursty candles. And then again, lower, 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 lower. We don't necessarily have the confirmation that we're looking for. So just something to watch out for, right? Nothing else we can do with that. Dollar yen. So we talked about the dollar yen. I'll remove this right now. Right, that was the range we were talking about being in, and we're in the same range. Again, we talked about a break. It came back and used it. We're talking about now we're back in the 132, 133 range. Extend the data from earlier in this week, and you can see if I extend this, all I'm doing is extending it across, right? We talked about 132.41 would be an area of buyers, and that's exactly what happened. I believe this trade is out too. I got an alert on this one as well. Right there, and 1 to 3 is right there. 2.99. There's 3.04. You can see that it is passed. So again, huge push down. Started in the European session, rolled right into 5:15. Right, 5:30 in the morning is their reversal time. So here, we'll do this just because I know it looks weird with all the candles. Here, let's do it this way. 3 o'clock is right there. Right, European session move. You could have actually shorted this off of that one. And when is the reversal time? 5:30. 5:30 is right there. I'll just turn back. And there's 5:30 in a level that we had marked off, which was also the 50% retracement tool. So, yep, trade is done. So, it sucks when they all go off at 5:30, but you guys should have known about that level. We talked about it yesterday being an area to go to. We talked about being short the dollar yen, but again, very difficult to play this one yesterday. As you can see, I mean, here's where it came up. It went up and just barely missed the 135, came back down again. It kind of grabbed a level here. It wasn't really kind of the ideal area, but again, kind of reversed back and then got stuck. And then as soon as the Europeans were able to get in, straight to the downside. So It's funny. This one kind of came through and bounced back up, but we don't really need it now. So yeah, that's where we're standing right now. Um, that's our target down. I'm not concerned about it right now. Yeah, I would look for a little bit more of a retracement back up again. Now again, I think is very difficult to play right now though because of obviously the Dow. But yeah, again, long is out. Again, gotta love 5:30 reversals, 10:30 reversals. My favorites. My favorites. Cryptos taking it on the chops, down 7% again, getting back down near those lows. It is under 21,000 now. We're looking to break 20. I know Robert Kiyosaki said, hey, if it gets down to 20, I'm buying some. If it gets to 16, I'm buying a whole heck of a lot of it. So we will see. Again, Ethereum down 11.6. Again, not at its lows. And it looks like it didn't break. It made it down to 1013 was as low as it got, right? So we're close to breaking 1,000 in Ethereum. As I said, I got a guy that he's a crypto slash NFT guy. Like the guy a lot. He's a really cool guy. He gets into it with people on Twitter all the time. He had this meme that I thought was awesome. It said stock market. So basically, it was the Grim Reaper. There was 3 doors on the wall, and the first door was open, and there was like blood, like he drug a body out, and it said stocks on the door. And then the second one had the same thing. There was a blood trail being drug out, right? On that door, it said crypto, and it was open. The third door was closed still, and the Grim Reaper was standing in front of it, and that one says real estate. So I don't know if he's saying that, if he's turning into the gloom and doomsay or whatever it was, but I thought it was pretty funny. So yeah, they're taking on the chops, and then Doji's down to like 5 cents. Thankfully, I confirmed it with James. Thankfully, James got rid of all his Doji's holdings, so he dumped the doggy. He out, which is good because he was making some money up at 13, 14. I hope to God he's not holding it at 5 cents. So, yeah. Bonds. Bonds, you can see, took quite a large gap down, as it should. I mean, again, they raised up yesterday because everybody was like, sell the market, right? So they were looking for some place to put money, not realizing that, wait a second, what happened? Wait, we just raised like what's going on here? Um, so yeah, justified gap down, not really lower. Again, bonds are getting to a point where it's kind of getting crazy for bonds. Um, you know, they're bonds. What are you gonna say? They're bonds. Um, let's see, where do we got here? Let's go into CL. So obviously this is coming down. We talked about a potential buying area at 116.15, and FOMC drove it down, and it did. It actually started to rally off of that level once it found its bottom in there, but it was short lived. And actually, let's see. Yeah, you know what? Look at that. It did. It pulled back up to the 23.6. It pulled back up to the 23.6 late at night, right? Late at night. So I don't really know how many U.S. traders would have been kind of dealing with that one. It's funny that that is now. Well, it's not anymore because it's lower. But yeah, there was a 23.6 short in there. I don't think at 9 o'clock at night I would have tried to short oil, but it's there. And now this is what we're looking at. So that level got broken through. Again, we talked about it being kind of a one play. And I would say, for this, we know we got a level down lower, and we've talked about this one. This is kind of really a profit target, and it's already been hit one time. I'm going to actually make sure that this is the same. That was close. Right. That's where we're looking at. I would say right now, downside target for oil is going to be at 111.25. Seems like a lot of room to go right now, but percentage-wise, it's not really that much. I think that's where we target. And this is a level that, again, has had a huge spike off of it before and acted as a basing. So it's a level that we've had buyers really, what is it, 111.25 to 110.75. It's a level that we've really had big buyers twice. So could we bounce off this level? I would say yeah, but we need kind of a confirmation of that level. We really need to kind of see it go into the level a little bit, pull back up again, and then kind of come back and then kind of falter, right? And that's really what we would be looking for. Is this justified? Absolutely 100%. And it just goes to show you that, everything that the government has done with the strategic oil reserve and Russia is bad and, this is Putin's problem. He raised it. It is, but it's not. I mean, a lot of it is the fact that we allowed things to go for as long as it did. We're looking for, and all these groups, they're looking for price stability, right? We yesterday on the 2 days ago, we were at 123.64, right? Now we're down here. Is this price stability? No. And this is why OPEC has done what they've done. Seeing, $10 deteriorate out in 2 days. It's quite a lot, right? That's quite a big move. Well, give me percentages. That is a 9.15%. That's a 10% drop in 1 week. It's very, very hard for companies to be able to budget when there's a 10% swing. Now, it's great when it goes down for 10%, right? We love that, but it could go up 10% too, right? So this is why OPEC is being kind of, providing more price stability. Talking about the US going into recession now, again, has had a lot more powerful effect than anything else that we've done. Okay. I can tell you right now, the war in Ukraine is not going well. Russia is taking more and more on. Zelensky's like, hey, listen, we need more stuff, guys. We need more, right? The U.S. just said, hey, you know what? We're going to send you another $1 billion. You can have another $1 billion. We're going to send you missile systems, right? We're going to send you some rockets, right? But Russia is now invoking policies in the Baltic that basically says, hey, listen, we are going to pull back our acknowledgement of those countries, which NATO Article 6 says that NATO also has to acknowledge that as part of some of the articles that they have to revert back to these old lines. So yeah. So it's Ukraine's not going well, and this is coming back down again. So how much of it is really Putin versus kind of what is the perception of what demand is? Economy's doing great, great. Oil is justified to be high. We're going to go into a recession. Oil is immediately tanking back 10% in 2 days. So rough play. I think it goes lower. If we can find some opportunity a bit lower, I think that's important. OPEC is basically still kind of saying what they're saying. We'll hear more about it. There was actually a surplus this week, but that's not what's driving it. It's the U.S. is going into a recession. Okay. Natural gas, unfortunately, is still going. Again, parabolic retracements are not always the fastest. It's about, let's see, is it halfway yet? Yeah, we're at the halfway mark right now. Right, we're not back to the origin of the move. Actually, I think just past the 78.6 is where I would look for this one, but it is creeping higher. Right, it's creeping higher. It's slowly going. Again, if you like week-long positions in, natural gas, then you're good. But otherwise, it's going. Not much else to say, right? It's kind of boring. Gold. Gold kind of cranking all over. Now, interestingly enough, we talked about the two levels up top, and this one, it had already been breached, and we already kind of pushed there yesterday. We're like, yeah, it's not really a zone, but it was an area earlier. It pushed through, and if you've done the top to bottom draw, you can see where the 50% is. Price pushed down into a level that we had confirmation of buyers at. It was an old level. It was violated. It came back down and kind of reestablished and said, this could be an area. 118.13, right? It came down and got a little bit lower than it got. It got down to 112.85. So again, absolutely would have triggered you on that one. And look at that. So people are like, does news matter? News is a catalyst. It'll drive price where it needs to be. Raising the interest rate 0.75 should have absolutely hammered gold. But what did it do? Did it act as a catalyst? Was there a catalyst off of news? Yes. Right? And I always say it acts as a catalyst to drive it where it's supposed to be. But how do I figure out where it's supposed to be? I use supply and demand. So even though, people are always like, why the heck did it go up? Because right now the market told us there were buyers there. The news, yes, acted as a catalyst. It went higher because of that news. So there you go. Interesting setup. I think it's a pretty decent move too. I didn't trade this one. But $28 in an hour. So yeah, I don't really do as much gold and silver. But there's your move, right? And now it's kind of creeping back down again, as it should. It should be red. It should be kind of creeping back to the downside. Once that initial shock is in, and everybody's so clueless about how did I just lose money on that one, I don't get it. Again, it kind of stopped and is leveling out. And actually, this morning, if you look at the 830 figure right here, right, there's a top, and again, it's kind of where it was basing, right? It went down, and it kind of Harry Potter, right? It came down, it based, it came back up again, found that level, and boom, pushed down, and then kind of hit it again. So it's like the third hit, right? And it's more justified to be down. So a couple different plays in that one. Silver, it looks almost identical. We said, hey, listen, silver would spike. We were looking for a spike up. We were looking for it to spike to 22. We didn't quite make it that high. It made it to 21.83. But it had already been moving all day. It pulled back in time for news. Magically, it pulled back to the same level we talked about, right? Yesterday, we were here, right, talking about this one. It did. It pulled back down. That was the turning point. Pulled back down, old violated level, and straight up. So again, you guys could have traded silver as well. Let's see what the indices are doing today besides being very ugly. Yeah, people jumped on board. So let's run this down to 15 minutes. There we go. All right, so mentioned with Todd, we were sitting right here in that 8:30, 8:45 window. I said, this is the big push down. There'd be an easy push back up again, but watch out for a trap at the open. Here's your open, 9:30, drove it straight down, and you can see what happened. What is the first candle after the open? There's 9:30, 9:35. It's time to go short. 9:40 was the pause, and then boom, popped you right back over again. So all the support and resistance traders out there, what do they tell you? Hey, when we break, when we break support, you sell it, and then you put your stop loss on the other side of, where the low was, right? Right? We put on the other side. Well, that's exactly what happened, right? It came in, you sold it right here, right? You put your stop loss on the other side of, kind of where the peak was, right? Right? Which would have been this old low here. And that's exactly what happened. It closed below on the opening, basically the second candle, right? 935. You sold it because you know it's below. And then you put your stop loss here because you know what you're doing. And then it came up, and what did it do? It stopped you out, right? And then it came back lower, and you're like, it knows what I'm doing. I'm not using stop losses anymore because I quit. And then it came lower, and then again, here is the other low, right? Because there's the new support and resistance. And then you bought it, and you're like, yeah. I got it. And now what it's doing. So, yep. So somebody's pissed off and not using stop losses this morning. So, yeah. Know the tricks, guys. Know the tricks. Okay. But we're looking for bottoms in here. So we are going to look for some bottoms. And again, had you taken this one, by the way, had you taken this pullback to the 23.6 at 8:30 in the morning, I believe you actually did get out of it. It's going to be close. Did you actually make it out? 1, 2, 3 is right there. Look at that. At the opening is when you would have gotten out. So, know your products, right? As of right now, like I said, I think we found a bottom today. Or not, it may not be the bottom, but we talked about finding some spot to where we could kind of really start stabilizing ourselves. As you can see right now, I mean, it is 10:27. We are literally, this is where reversal would come in. The old Harry Potter, and again, we were looking for a more refined zone. Well, there was the refined zone from it, right? Where the basing actually came in at. It's turning and reversing. So, you should be out at this point from the short. A lot of people are short and now looking at this as like if this is going to go positive. Um, just watch out for it. NQ, we talked about was going to be rough. It also pulled back to a level. This one actually broke a little bit above the 23. And again, we were kind of on the near side of it. But at the same point, again, the 830 candles would kind of bust this through just a little bit. Had you taken on Nadex, that wouldn't have mattered as much. Nice push to the downside. I think this is also a 1 to 3 from that level. Let's see. Yeah, the 1 to 3 is right there. So it is out. And also it's, again, the 1030 candle and you're seeing green. You're like, wait, what the heck is going on? And again, the trap on this one would have been sitting right there, right? Magically, one candle comes through and then came and pulled right back. So kind of the same idea. Again, this is not the leader now. The Russell is. I mentioned that Russell would have it the worst today. Here's YM. Told you 30,000 was going to be a big one. Everybody's going to be talking about it. Look at that. We broke through 30,000. It was like, yep, the world is ending. Broke through 30,000. And as soon as it did, people are like, everybody's got to short it. I'm shorting it at 30,000. And then green, red, and then boom. Have now been stopped out officially, right? Because we're back at 30,000, 36. So told you that would be big. And again, it's always nice when the completion of the trade, you're getting out with your profit as everybody else is getting in. And now it's rallying right back up to where it was. So again, would this have been an opening trade at 9:30 this morning? No, it was already in the trade. It was already hitting profit target. So ES, let's see. Yeah, ES at 9:30 was completing the trade. So again, it wasn't an entry. The entry came in early at 8:30. So again, was it the opening 15-minute? No. Was it a 15-minute trade? Yeah, you should already been in at 8:30 this morning. So again, I'm not going to count it towards our kind of like data results here, but again, it was completing the trade you were already in. NQ, kind of the same thing. Would you have done an opening print trade? No, because it was already in a trade as well. It was the same, turnaround point from the 8:30 time frame. You know, right? What was 8:30? This, right? It pulled back up into that range. Now, had you taken this in futures, you probably got stopped, but you were already in a trade, so it was not an opening trade. Would you have done this one at 8:30 this morning? Yep, 23% pullback in an area of sellers that is confirmed, and boom, straight out. Would you have traded this one at 9:30? No, you were 2/3 of the way to your target, right? There was no reason to actually trade that one. But did it trap people? Absolutely. So, and I literally telegraphed every single one of these at the open. Russell, Same thing. 8:30. Would you have traded this one short? Yes. Would you have traded this one at 9:30, which is right here? No, you're already in a trade. Did it go down? Yes. I talked about. I mean, I drew this here. I mean, we were for Todd's presentation. We were sitting right here, right? Here's where we were for at 9 o'clock, 9:15, right there, right, right there. There's where we were for Todd's presentation, and I literally said, "There was your base. There's your Harry Potter. There's your pullback, and there's your target, and you were out." Is this a reversal level? I actually don't think it's a horrible one. The fact that it hit this at 10 o'clock, 10:15 ish, again, that would be where a reversal was coming in. Do you want to go against the markets today? You could. It is the weakest. You typically don't want to go counter trend against the weakest out there. It could be considered a parabolic move as well. But, with that said, raising interest rates is a fundamental change in the market. It is going to be the worst for small businesses, which is not, I mean, again, small businesses, Russell is not necessarily small, but they are the smaller companies out there. They are affected more than the ES and the YMs out there in the market. I would say on this one, again, I would probably wait for it to base a little bit and pull back before going long. Remember, it's always a profit target first before it is a confirmation. And again, it was the opposing zone. That's where we were looking to get into things. So yeah, kind of out for the day. There's nothing else to do on that one. Will it reverse? Probably a bit. But man, talk about some easy traps out there. Um, yeah. So hopefully you guys are able to take advantage of those. This is what sucks about after like a day with like blockbuster movement. All your trade setups are kind of busted, and you're kind of waiting for it to kind of retrace and stabilize itself for new things. Um, But yeah, so much out there, so much to the analysis, and it's always fun. This is why I do it, right? I love drawing these things on there like that, especially when, like, literally, for Nadex, we were like, hey, listen, here's your pattern. Here's the pattern we drew, and there's the pattern we were right here. And now, an hour later, we're done. So cool stuff. So, all right, with that, let's go ahead and do our drawing today. Now, Debbie, let's see, contest. It's not a contest. Where's that? It's giveaway. Debbie, look at this. You guys are trying to give this one to Debbie right now. Debbie is on number 3, right? Debbie's on number 3. Who we missed? We got Neuro. We got no Will. Will may be on vacation. I got to check with Will. Will may actually be traveling. Will may actually be traveling. Ernest is like, oh, heck no. I got to stand up to Debbie, right? Debbie's in with 1. And again, Debbie, come on. Debbie, let's go, Debbie. Debbie, buy 2 more. Buy at least 2 more, Debbie. Ernest is risking 40 pip chips to make 25. You are risking 20 pip chips to make 250, right? Debbie, we're working on this risk to reward ratio thing here. Come on. You're going to have to purchase Neuro's ebook on how to win pip chips. The man went back to back 2 times. Yeah, Kip is telling you, Debbie, buy at least 1 more. He just said it. He said, buy 1 more, Debbie. Ernest, you see this? This is a perfect example, an absolutely textbook example about the differences between men and women in the markets, right? Men, they make more money because they are able to handle risk. Women, it takes them longer to do it because they are risk adverse. I'm telling you right now, this is exactly what's going on here, right? This is all the reason in the world, right? I always get this question: is it true that women make better traders than men? I go, not necessarily. It depends what your definition of better is, right? They follow rules. They follow the rules, but they're very risk averse. So they tend not to make as much. Where men definitely are riskier. And once you understand it, taking larger risks, you get larger gains. So, I'll comment on that. I'll not comment on that. So, all right, I'm closing down. I've given Debbie I can't give Debbie any more opportunities. If Marina wins today, everything's out the window because Marina's like, you just need a hack. But I'm telling you, watch out for these 3. This is going to mess it up for everybody. All right, winners today's drawing is Ernest. He had a 50% chance of winning. Ernest could have flipped the coin on that one, right? So see, Debbie, you should have went in big. So Ernest wasted 70 pip chips to get 70 to make 25, right? You only risk 30 to make 250, Debbie. Debbie's going for these 1 to 10 trades, right? 1 to 10 trades. No. That's how you stop a winning streak. Ernest bought. Yeah, Ernest bought 8. Yeah, yeah. Hey, Debbie. Men also believe sometimes that it's better to be right than have it be, financially, a good idea. Women aren't into that. You, Marina, and you guys aren't into the like. You know what? It's more important about stopping their winning streak. Men, we got a little bit ego sometimes. So, but Ernest reigned supreme today, right? 50% chance of winning. So, all right, with that said, I'm out of here. I'll catch you guys tomorrow. Everybody, good trading today. Like I said, so many opportunities. That could be why Will's not here today. Will is out partying. Will made $1 billion last night, maybe. We'll have to see. So, all right, I'm out of here. I'm gonna mark this complete. Oh wait, I'm gonna give Ernest this. Hold on, I almost forgot there. Ernest would have got roasted me for that one later on. It's only 25, but he would have roasted me for it. Yeah, there we go. Just proof that it's in. Loser, loser, chicken dinner. Yeah, exactly, Debbie. That's exactly what it is. Yeah, yeah. Actually, it's winner, winner, chicken dinner. But it is, I think he's a Kardashian person, and she just did that big ad where I don't know, Chloe. I can't keep him track. Chloe is now on the plant-based chicken nugget kick. So maybe he's winner, winner, chicken dinner. Maybe I don't know. It could be that. So anyway, I'm out of here. I'll catch you guys tomorrow. Have a good day, trading day. Need anything? Shoot me a message on Discord. Take care.